You know, a lot of people think that electric cars are not really having a big impact globally, but actually they are. In fact, recent data has shown that EVs and EVs particularly powered by solar have massively reduced emissions. Now that's one of the big advantages. Another big advantage is that the IEA says the global oil market is facing a million barrel glut because, well, primarily of reduced demand, or at least much less demand for fossil fuels than what the oil market believed was going to happen. Now, this kind of maybe flies in the face a little bit of what Trump has been saying, that America's going to become this enormous oil producer and somehow this is going to help the American population in a significant way. I don't think that that's necessarily the best decision. Hello, my friends. Welcome to the channel. Great to have you with us. I'm Sam Evans. You're watching the Electric Viking. Global oil markets are facing a surplus of more than a million barrels every single day next year as Chinese demand continues to drop, mostly as a result of the fact that China is moving towards renewables and electric cars. This is cushioning prices against turmoil in the Middle East and beyond, says the IEA. Oil consumption in China, the powerhouse of world markets for the past 2 decades, has contracted, as in reduced, for 6 straight months through September, and will grow at the lowest rate in history this year. Now, the global glut would be even bigger if OPEC Plus decides to press on with plans to revive halted production when it gathers next month. Basically, it has halted a significant percentage of production. So this million barrel glut per day would have been much bigger otherwise. It's possible that China's oil demand has peaked, said the IEA. Head of Oil Industry and Markets, Toral Bassoni, in an interview with Bloomberg TV on Thursday. Remember, the Chinese government are massively subsidizing purchase of plug-in hybrids, but more so electric cars, and they make it very hard to register a new internal combustion engine vehicle. It's very expensive. You've got to enter a lottery. You've got to pay a lot of money. It makes it really, in most cities in China, virtually an impossibility. What that means is that around 55% of all sales in China now are electric vehicles. And therefore, the fleet of internal combustion, gasoline, diesel-powered vehicles will actually begin to diminish significantly over the next 5 years. Thus, one of the reasons why the IEA believes that peak oil has happened in China. Amid this extended weakness in Chinese demand, crude prices have retreated by 11% since early October, despite ongoing hostilities between Israel and Iran, as traders focus growing output in the Americas, the Paris-based IEA said. The decline foreshadows a well-supplied market in 2025. Brent futures traded near $72 a barrel on Thursday. In other words, maybe don't invest in fossil fuels at this point in time because they're on the decline. Global oil consumption will probably increase by around 900,000 barrels a day this year, but that's less than half the rate seen in 2023. Less than half. That means a massive slowdown is occurring right now. Now, to give you an idea on the numbers, globally, the world uses around 102.8 million barrels per day. So what's more important than the 900,000 barrel increase or the excess of 1 million per day is the fact that it appears as though peak oil has happened in China. And it appears as though, very likely worldwide, global consumption will, rather than increase next year, actually begin to decrease. And if not next year, almost certainly that will happen in 2026. The sub 1 million barrel a day growth pace for both years reflects below par global economic conditions, with the post-pandemic release of pent-up demand now complete. Rapid deployment of clean energy technologies is increasingly displacing oil in transport and power generation. The agency, which advises major economies, predicted earlier this year that world demand will stop growing this decade amid an enormous shift away from fossil fuels towards electric vehicles and renewable energy. While demand growth cools, supplies from producers such as the US, Brazil, Canada, and Guyana is set to grow this year and next by 1.5 million barrels a day, the agency predicts, meaning there will be a significant glut. As a result, world supplies will massively exceed demand next year, even if the 23-nation OPEC Plus cartel abandons plans to restore output. So as the world moves at a pretty rapid pace towards electrification, and it is, I mean, electric car sales have grown 30% this year. That's a big growth number. And that's actually one of the highest numbers in terms of actual cars sold that we've ever seen before. That number, though, will simply increase next year and then increase again the following year as we see better and better EVs at lower prices with more and more range and faster charging, and more people have solar so they can power their EVs as well. Also, the rise in plug-in hybrids is going to continue to essentially destroy oil demand. Now, even people who don't like EVs, they are still willing to buy a plug-in hybrid, and they will therefore use probably 50% less fuel than normal. So if you are invested in fossil fuels, clearly now is the time to get out.